Hello, everyone. I want to share something important. It's from last month, but I didn't want you to miss it. On October 31st, I ran a video about gold and specific opportunities to invest in gold. Now, at the time, gold had dropped from $4,300 to $3,800 per ounce, but our timing was perfect. Now gold is headed back up, and all three of the investments I highlighted have been moving upward too. So I wanted to share this with you one more time before it's too late. So here, in case you missed it, is my collection of 3 gold stocks set to soar. Everyone's talking about gold hitting $4,000, but the biggest gains don't come right after the celebration, they come before it. So today, I'm going to show you why gold's recent pullback is a gift, not a warning, as we dive into 3 different gold stocks with ridiculous upside potential that could soar in the months to come. I'm Matt Weinschenk. I'm an analyst with over 20 years of experience in the stock market. Welcome back to This Week on Wall Street. So today I'm going to show you why gold's recent pullback is an opportunity and why history says the real rally hasn't even begun. So let's start with what's really happening under the surface. What if I told you this gold rally hasn't even started yet? Gold just pulled back 9% after a 65% run this year, but pullbacks after big runs are normal, and it happens in every bull market. Right now, much of the crowd thinks this was a top, but that's how every bull market feels. Uncomfortable, uncertain, and easy to doubt. When you dig in, it's clear we're not at the euphoric stage yet. The average investor still isn't talking about gold. CNBC isn't flashing 24-hour gold tickers. There's no mania. All the gold dealers we talk to tell us that sellers still outnumber buyers, and that's bullish. The frenzy isn't here yet. Which brings me to our first gold stock pick. And before I get to it, I want to point out that Stansberry Research is not new to this. We've been covering gold for decades now, and if you want to find more of our top gold plays and the story behind gold, go to goldalert2025.com. That's where you can find our deepest research, goldalert2025.com. But our first pick today is the Spider Gold Shares Exchange Traded Fund with the ticker GLD. Yes, this is super simple. You may already know about it, but plenty of folks new to gold don't. So this is an exchange-traded fund that you can buy quickly in any brokerage account, and it gives you perfect exposure to the price of gold. If gold rises from here, this fund will move along in lockstep. Now, the fund does that because each share is tied to physical holdings of gold. The fund owns more than 30,000 ounces of actual gold to back the ETF. They have these big piles of gold bars in 3 separate vaults in London and New York, and they're under the protection of HSBC Bank and JP Morgan. So owning a share of this ETF is like having a little ticket that entitles you to a share of a gold bar deep underground in London. Now, if you want to go out and buy gold and store gold and protect it, that can get really expensive, but this fund only charges a 0.4% annual fee. So if you invest $1,000, you only end up paying like $4 for the privilege of being invested in gold. So it's a great way to get invested. Now, the true believers in gold feel like you need to own those gold bars, you need to own those gold coins and keep them buried in your backyard. And one of the promises of gold is that you can use it as money if society breaks down. So this GLD ETF may not promise the same in such a scenario, but if you're not worried about all that and you want to get invested in gold as an asset class, this is the easiest way to do it. Now, if you're still not sure where the price of gold is headed, know this. In markets, uncertainty equals opportunity. When everyone's sure, you're already late. And most people still don't own gold. So answer me this. Drop a comment below and tell me, when was the last time you saw someone brag about owning gold? Even still, gold has momentum, and momentum like this doesn't vanish overnight. So if you've been waiting for the perfect entry, this may be it. And the reason this setup matters isn't just technical, it's psychological. The best trades always feel wrong at first. In every bull market, there are 3 emotional phases. There's disbelief, and that's when the smart money accumulates. There's acceptance, when the public starts to notice. And then there's euphoria, when everyone's excited, and that's what signals the top. But right now, we're still at disbelief. The smartest investors, central banks, hedge funds, long-term investors are loading up quietly. Meanwhile, retail investors are still sitting out, afraid they already missed it. And that's what creates the next leg higher. The biggest rallies happen when the crowd still doubts the rally exists. What's one asset you regret doubting early? Bitcoin, AI stocks? Tell me about that below. And central banks are hoarding gold like it's 1965 again. And you have to ask, why? Now, central banks bought more gold last year than in any year since the 1960s. These are the most conservative investors on earth. They don't gamble. They only care about protection. So when they move this aggressively, it means one thing. They are losing faith in paper money. Think about it. These institutions manage trillions. They're not buying meme stocks. They're buying insurance. And the average investor is still asleep. That disconnect is exactly what makes gold's next move so powerful, which brings us to our second gold pick. And this one is the stock of a company that mines gold. Gold mining stocks behave quite differently than gold. And here's why. So, like all stocks, gold mining stocks are priced on how much they earn. Mines have a cost to get gold out of the ground, and it varies from mine to mine, but call it $1,000 per ounce. Then they sell at the prevailing price. So if the mining cost is $1,000, with gold at $2,000, the profit is $1,000. With gold at $3,000, the profit's $2,000. And with gold at $4,000, gold mining companies make $3,000 per ounce. So in that example, gold has doubled from $2,000 to $4,000, but mining profits have tripled. So when your cost stays the same, but the price goes up, this is called operating leverage. And it means gold mining stocks make much more dramatic moves than the price of gold. And my favorite gold mining stock today is Agnico Eagle Mines with the ticker AEM. It's the third largest producer of gold in the world. It's got great mining assets, Detour Lake in Canada, the LaRonde Complex in Quebec, Fosterville in Victoria, Australia, and it's got a great, stable management team. It's on only its third CEO in 60 years. And over the last year, its earnings have leapt from $1.3 billion per year to $2.9 billion. But that's just the start. Since its all-in costs of gold production are below $1,000 per ounce, with some mine sites closer to $600 per ounce, it's got a great few years ahead of it. But even central banks can't move markets alone. It's the crowd that finishes the job. You'll know the gold rally is ending when your barber starts talking about it. Every major bull run ends the same way, when disbelief turns into euphoria. And right now, we're nowhere near that. Retail investors aren't flooding into gold ETFs. Few people are buying gold coins and gold bars as an investment. The public just hasn't arrived yet, but it will. And when it does, that's when you'll see parabolic moves, $5,000, even $6,000 per ounce. And that's not a prediction. That's just the same pattern we've seen in every commodity cycle for 50 years. So would you buy gold here or wait for the pullback? Leave a comment below. The most dangerous thing you can feel in a bull market is confidence. When gold starts going vertical, that's when investors start getting cocky. They forget risk, they over-leverage, they chase the move. But here's the paradox. You make the most money when you feel the most uncomfortable. That's why the current moment, this uneasy middle, is where fortunes are built. When it feels too good to be true, it usually is. And when it feels uncertain, you're early. And that brings us to the final gold stock. Now, mining is difficult. So what if you could get a stock that gets all the benefits of pulling gold out of the ground without the headache of building and digging and transporting and all that stuff? And what if that stock made a ton more money when gold prices were high? That's what happens with a particular type of gold stock called a gold royalty company. In a royalty deal, this company goes out and finds a mine operator that needs capital to build or expand a mine. It invests up front, and then it gets a percentage of the mine's revenue as it produces gold. It's like venture capital, but for gold mining. And the best stock doing this right now is called Franco-Nevada with the ticker FNV. This was founded by legendary gold investor Pierre Lassonde back in the 1980s. And to show you how well this can work, back in 1986, Lassonde invested $2 million in a small mine named Goldstrike. And since then, it's paid out over $1 billion in royalty payments. So Franco now has stakes in 430 projects. More than 100 of them are producing mines. Others are being developed or even exploration projects with big potential upside. Since all it does is sit and own a little piece of these mines, Franco earns more than $1 billion in annual revenue with just 35 employees. And since its costs are so low, when the price of gold goes up, its profits just explode. That's why the shares can move so much. This is one of our favorite long-held stocks at Stansberry Research, and it's compounded at more than 16% per year since its founding. It's a great wealth builder. And back to the price of gold. If you sell now, you're repeating history. Pullbacks like last week's 9% dip are how markets reset, not how they end. And every gold bull market in history has tested conviction before rewarding patience. The data says momentum's intact, the psychology says disbelief still rules, and that combination only happens once per cycle. So don't let a short-term wobble shake you out of a long-term story. I'll continue tracking this rally every week and show you exactly when that disbelief finally turns into mania. And if you want to know more right now about some of the best gold plays in the market, check out goldalert2025.com or use this QR code. You can watch a presentation from a former Goldman Sachs vice president and retirement expert who can show you how to protect your retirement with gold. So check that out now. As always, like and subscribe so you don't miss our next update, and I will be back next week.